A massive reversal just unfolded in the precious metals market, and most people completely missed what it actually means. Gold has surged more than 11% off its recent bottom, pushing back above the 4,180 level and adding roughly $3.07 trillion in market value in just 30 hours. Silver followed with even more force, rebounding nearly 20% from its lows, reclaiming the 88 level, and adding close to $800 billion in market cap over the same window. That's almost $4 trillion recovered in barely over a day, nearly 35% of the entire $11 trillion wipeout that recently shook the market. And here's the part that most people don't want to talk about, that $4 trillion recovery happened while retail investors were panic selling. This is the textbook definition of forced liquidation on the way down and a short squeeze on the way back up. Volatility isn't the enemy here. Volatility is the opportunity. Gold back above 4,900, silver back above 88, all after a violent shakeout from all-time highs. In a matter of hours, the metals complex added more than $4 trillion in value. Now, I want to address something directly. A few hours before this reversal, I posted on X about the consequences this channel and its viewers would face after I released the JP Morgan crash video. Once you read that post and watch that video, it becomes very clear. This channel was first to break that analysis, and ever since, something strange has been happening. Viewers are being unsubscribed repeatedly. Channels that copy our titles, thumbnails, and even our analysis have exploded in growth over the past few days. This isn't coincidence. Every time our team uploads within hours, copycat channels replicate our thumbnails, headlines, and talking points. They do it because they know the truth. OG is the source code. Without this channel's work, hundreds of others disappear overnight. But Team OG will remain right here at the top, guiding people through noise, manipulation, and misinformation. Our analysis will stay unbiased, data-driven, and direct. We are confident in precious metals, but we are not blind. We understand how institutions manipulate markets, how paper derivatives distort price signals, and how the system fights desperately to hide signs of structural failure. If you're looking for hype, there are plenty of channels repackaging our content for clicks. This channel was built on education and unfiltered truth, and we will not back down, regardless of consequences. Let me be crystal clear. We have never asked for money, and we never will. Anyone pretending otherwise is a scammer and should be avoided immediately. Our only official accounts on YouTube and X are under OG John AG. No affiliates, no hype merchants, no paid signals. As for the JP Morgan video, our team is actively investigating the fallout it caused, both for the channel and for our audience. We'll update you shortly. Now, let's get back to why this $4 trillion reversal matters so much. In a single day, another 2.8% of silver was drained from vaults. Not over weeks, not over months. One day. Vaults are emptying at an accelerating pace, and while that's happening, China just revealed its endgame. An official article published by Xi Jinping appeared on China's central government website, outlining the blueprint for building financial power. The Chinese version of this article is very different from the English translation. In the Chinese version, 6 core objectives are laid out, with currency strength as the top priority. And here's the key point. To have a strong currency, a nation must control gold pricing power. That requires becoming the world's largest producer, consumer, and importer of gold, and holding the largest reserves on Earth. This wasn't speculation. This was official state policy published in Xuxi, reinforced by what many are calling the financial sector's September 3rd military parade. The message is clear. China is nearly finished preparing. Its massive gold reserves will back the internationalization of the renminbi. The global gold endgame is approaching. Gold defines the value of currencies and underpins the next monetary order. China is one of the main players, and this is happening right in front of us. Precious metal pricing power is shifting east. Whoever controls silver supply holds leverage. Whoever controls gold holds authority, and the data confirms China is executing this strategy aggressively. China is buying 10 times more gold than it officially reports. In November alone, it acquired approximately 10 tons, while publicly reporting just 0.9 tons. In September, it bought around 15 tons, yet reported a fraction of that. The accumulation is deliberate, quiet, strategic. The true reserve size is far larger than anyone admits. Now look at pricing. Western silver spot sits near 88. Shanghai spot trades closer to 14. Shanghai futures bounced to 102 after testing 95. Premiums compressed slightly, but still hover near $16, a 20% premium. After a 40% crash and a 20% rebound, physical metal still trades above paper. That's the signal. This brings us back to the $4 trillion reversal. This entire drop was manufactured. The crowd panic sold. Hedge funds, central banks, and sovereign players quietly accumulated. Algorithms executed volume at the lows. Screen prices are derivatives, leveraged, speculative, synthetic. The real price is what it costs to take delivery. Look at Singapore. As prices fell, people lined up at United Overseas Bank, the only Singapore bank offering physical gold. Retail buyers didn't flee, they bought. Physical demand surged even as paper collapsed. Gold is now up nearly $500, or 9% from its lows. Meanwhile, paper market activity exploded. SLV trading volume hit a record 41 billion, more than any stock on earth that day. That wasn't retail, that was institutional panic. Even after aggressive selling attempts, open interest only dropped about 6,000 contracts to roughly 142,000. Back in 2011, during the Reddit silver squeeze, open interest exceeded 250,000. Data keeps saying the same thing. This is not retail driven. Retail sold the bottom. Institutions bought it. Retail doesn't move $4 trillion in 30 hours. Sovereigns do, central banks do, China does. And while this happens, the US launches a $12 billion critical mineral stockpile, openly acknowledging scarcity. Trump's administration is funding it through public loans and private capital. Governments are securing real assets ahead of currency devaluation. The message couldn't be clearer. Meanwhile, bullion dealers are running out. One 1,000-ounce silver bar remains in pre-sale at Bullion Star. Vaults drained 2.8% in a day. China buying 10 times reported amounts. The squeeze is real. They hiked margins. They smashed prices. And metals still ripped higher. Banks are trapped. Now let's talk risks, because they matter. Japan's 30-year bond yield just hit its highest level since inception. Japan's debt to GDP is 250%. The US sits near 120%. Japan holds $1.22 trillion in US treasuries. For decades, the carry trade worked. Borrow at zero. Buy US bonds. Pocket the spread. That trade is dead. Japanese bonds now yield nearly as much. Currency risk remains. Capital is coming home. Hundreds of billions, potentially the entire $1.22 trillion odds could unwind. When supply rises and demand falls, yields spike. When yields spike, everything else cracks. The S&P already dropped 2%, over $1 trillion erased. Treasury officials are calling Japan. The Fed is propping up the yen. The dollar was dumped at the fastest pace in 2 years. This is stress. This is why metals were initially slammed. Forced liquidation. But once the selling ends, fundamentals return. Stock markets are entering late cycle instability. Precious metals outperform during these phases. Concentration risk is extreme. When this breaks, money flows to real assets. Can gold retake 5,000? Can silver challenge 100? Momentum is shifting. China is preparing to reveal true reserves. If official numbers jump tenfold, the market reprices instantly. Central banks rush to accumulate. The final phase begins. So where does this leave us? $4 trillion recovered in 30 hours. Forced liquidation followed by a short squeeze. Physical demand never left. Paper flushed. China executing strategy. Vaults draining. Dealers sold out. The tension remains. Does systemic stress cause another liquidation? Or does physical scarcity overwhelm paper suppression? March delivery is approaching. Comic stocks are thin. China accumulates quietly. Singapore lines grow longer. Know the risks. Understand the system. The paper market creates volatility. The physical market sets the floor. Invest with logic, not hype. Think independently. And never follow anyone blindly.